IIFL is the stock in focus. Balance sheet growth has remained strong for IIFL Holdings. Loan growth has been strong, but some parts of EBITDA and profits would be questionable compared to the quarter gone by because of the higher cost of money as well as higher provisions. Prabodh Agrawal, Group CFO of IIFL, joins in. Good morning, Prabodh. Thank you very much. Well, the assets under management have showed a very good growth, 40% YOY. What stood out for you in the second quarter?
Yeah, so our loan AUM grew by 8% Q-on-Q and 40% YOY to 36,400 crore. It is a well-diversified growth. As you know, we have a diversified product range, home loan, loan against property, construction finance, gold loan, commercial vehicle loan, SME and microfinance. And so the growth was more pronounced in three segments: home loan, SME loans and microfinance loans. Beside that, we also saw decent growth in gold loan. Our NIMs were at 6.8%, asset quality was stable, gross NPAs were at 2.2% and net NPA was around 1%. And overall, our profits grew by 70% YOY to 161 crores. So I think it was a good performance.
Okay. If you can update us on your liability mix and how much of your short-term money is due for redemption in the next 2 months?
So we have a diversified mix of liabilities, which is consisting of term loans, NCDs, refinance from NHB, CBLO borrowings, and sub-debt, as well as short-term commercial paper. The share of commercial paper was 24% of total borrowing as of 30th September. But we also had liquid investments of close to 3,000 crores and committed lines of credit of around 3,000 crores. And in the month of October, we have been able to further repay close to 4,300 crores of CP. This is something which we are actively managing, in terms of the way we are managing is, there is a direct assignment pool that we have identified which we can sell down. We are speaking to banks for new term lines. We are speaking to NHB for new lines of refinance. There is a possibility of public issuance of NCD that we could be looking at. And our overall asset growth will also slow down.
Okay. What has been the increase in cost of funds for you incrementally? Also, how much liquidity do you have?
Sure. So our average cost of borrowing, which was 8.6% in first quarter, has gone up to 8.7% in the second quarter. So that is a marginal increase. But our incremental borrowing costs have increased by 75 to 100 basis points. So that's a very sharp increase in view of the current liquidity crisis. And of course, we'll have to pass this on. We are already passing it on to our borrowers. About the prevailing liquidity condition. See, the thing is that, of course, we know that the liquidity crisis precipitated because of the IL&FS default. And then subsequently, the mutual fund industry had some redemptions because of the NAV hit that they took on their IL&FS exposure. And subsequently, the mutual funds have become much more careful about investing in NBFCs and HFCs, and they would like that exposure to come down. And as that exposure is coming down, so therefore that has to be replaced by alternate sources of funding. Now that alternate sources of funding is coming from either banks or from refinance agencies like NHB or SIDB. So I would say the situation is still evolving, where banks have enough liquidity. And they are gradually using this liquidity to buy assets or extend new lines.
Okay, your net interest margins have declined by 40 basis points to 6.8%. If you can guide us on your margins as you see it in a rising interest rate scenario.
Yeah, sure. So our NIMs contracted by about 50 basis point Q on Q, but that is because of one-off item. You know, under the Ind AS accounting, you know, when we sell down assets through direct assignment, you know, the gain is booked upfront. So we had a very large direct assignment transactions in the first quarter of around 2,400 crore, on which we had booked 40 crores of you know, upfront gains. In the second quarter, we did direct assignment of 1,500 crore, so the volumes were lower. But more importantly, what happened is that some of the gains which were booked in the first quarter were reversed. So because of that, the net gain in the second quarter was zero. So the delta is about 40 crore, which is explains the hit in our NIMs. But on a normalized basis, you know, it is stable Q on Q. Going forward now, you said how is the outlook? Now, of course, our cost of borrowings have gone up by 75 to 100 basis points, but 45% of my loans are on a floating rate basis. I'm able to reprice that. So I've already repriced these loans by 90 to 100 basis points, loans like home loan, LAP and construction finance. The other important feature of my loan book is that I have very short duration loans. You know, about 26% of my loans actually mature within 6 months, and about 40% of my loans mature within 1 year. And therefore, you know, I'll be able to reprice these loans, you know, very quickly.
Okay, finally, Prabodh, the loan growth in the first half was at 40%. Will there be any of this at all in the second quarter, in the second half?
No, the growth will slow down. You know, of course, that kind of growth is not sustainable, at least in the current environment. And we are looking to grow 2 or 3 products, basically home loan and gold loan. But most other products will actually, the growth will moderate. And our overall growth will also moderate significantly.
Okay. Well, thank you very much for that very candid reply. Yes, we are going to see a moderation in growth, but the situation in liquidity is evolving.
Yeah. I just want to point out, you know, there's a couple of stocks where you're seeing some profit taking after that big gap up actually. You know, SRF for sure stands out. But the other one where you're seeing quite a bit of profit taking is IGL. That also is now slipping a bit. And of course, IT stocks, Tech Mahindra right now has made the low of the morning. So, I mean, the market is still up 400 points on the Sensex. And
Tech Mahindra itself was in the red and came to the green. So, yeah, you know, it's only taken off a little bit of its green.
Yes, Canpin Homes, just pull out Canpin Homes intraday chart. That one's seen a bit of a dip towards the lows. And Bajaj Finance as well, just see the intraday chart on that one. That's also looking quite interesting. So, still up 130 points, of course, on the Nifty, though.
It's a little bit of shaving in the mid caps, but I think the big guys have just not looked behind from the word go. Well, that's the market looking extremely pleasing at this point in time, and advanced declines a little bit I mean, it was 5:1, and now it's 4.89:1. So really, no one is complaining. Okay, with that, let's get to the next corporate, the big one. Arvind has reported a good set of earnings, not accounting for the demerger. The numbers are largely in line with expectations. Kulin Lalbhai, Executive Director, joins us now. Kulin, good to see you again after a very short break, actually. Just give us more color, literally, on the quarter gone by. How was it in terms of demand? And you also gone through the first month of the current quarter, which is the big festive quarter. So some color on the third quarter as well.
Sure, I think Q2 was a good quarter for us overall. I think in textiles, a couple of call-outs. Our advanced material business has done exceedingly well. That business has come of age. So this particular quarter, that business grew by 24%. And there's been a huge pivot in the bottom line. So it was a break-even business last year, and this year it's become a 10% EBITDA business. And we expect this business to continue to grow very, very quickly. So, you know, it should see a 20+% growth every year. And you will see further operating leverage coming in that business. I think the brands business also had a good quarter. In tough market conditions, the business still was able to grow 13%. This year, festive is later than last year, so a lot of the festive sales would be in Q3. That's why Q2 would have a different base. But in spite of all of that, I think we've grown at 13%. And even though we've invested more in marketing, we have been able to get operating leverage in that business as well. So I think the bottom line has been very strong across the board. On your question on festive, I think the early indications are good. So we have 10 days left of festive, but so far we have seen a good growth. I think we have been largely on budget as far as festive is concerned.
Okay. Despite a 13% growth in your top line this quarter, you're still guiding for a 10% revenue growth for the entire fiscal. And this is, you know, with the festive season actually going to, which could bump up your sales in Q3. If you could guide us what's gone through your guidance?
No, so if you look at the 10%, that's more for our textile and manufacturing business, which was the guidance we had given earlier in the year as well. As far as our brands business is concerned, the guidance remains the same. It's close to 20% for the year. And because festive is in Q3, you will see a higher growth coming in Q3, Q4. So we hope to close the year with a growth closer to 20%.
Okay.
Okay.
How have the export markets done?
So Lata, I think the good news in exports is that there is structural demand which is moving to this part of the world. I think all the discussions on trade recalibration happening between the bigger markets, the implication is that South Asia is becoming strategic and important. So brands which were not looking at this part of the world are looking at this part of the world. And obviously the currency has helped improve the competitiveness of India significantly. So we are hoping the export opportunity will be very exciting. The company has some hedges for another quarter or so. But I think as we will be able to realize the full benefits of the currency, I think that would be a great opportunity for us. And to capitalize from this, we are already undertaking large expansion in our garmenting capacity across various centers in India. So I think structurally the export opportunity will be very exciting.
Yeah, I think right now the market is reacting to more from the issues arising out of US and, you know, talking about duties, etc. The stock down about 4% right now. Kulin, good morning. If the tensions were to escalate, could that have seriously damaging impact? Or?
The GSP has already been removed, isn't it?
No.
The generalized system of preferences overnight, does that hurt you all?
No, in fact, what I was referring to is that India currently, at least in the textile trade, seems to be a net beneficiary. The global trade is dominated by China, which controls 35%
Kulin, I take your point.
of the trade.
That would be the currency part, I agree. But yes, overnight, there was news from the United States. They're completely cutting out the generalized system of preferences. And I would assume textiles are
the
part
textile
of it.
piece did not enjoy...
Okay, did not enjoy duty free.
No, we never enjoyed that access. India has always been full duty as far as textiles is concerned.
Okay, okay. Well, you know, even otherwise, the branded apparel business margins are at 6.2, and even the branded revenue growth trend has been dipping. I mean, would you be able to arrest the trend? Will that continue for a bit?
The trend in Q2, Lata, is more because of Diwali. Last year, Diwali was earlier, so September was a very large month for us. This year, it's the absolute opposite, where September was a very low month. So it's more of a festive kind of adjustment. As I mentioned, for the year, our guidance on growth at close to 20% remains. So I don't think we are worried about the growth of the branded segment. I think we are on track.
Okay. And on margins, you have guided for profitability to improve by nearly 100 basis points for both textiles as well as for the branded apparel business.
Right.
Would this be on account of the rupee depreciation? Has the company taken some price hikes? If you could tell us what has gone into that.
In textiles, it's you know, more to do with some of our smaller businesses scaling up. So I think the technical textiles business, for example, has seen a very strong pivot in the bottom line. So some of these segments are what is kind of lifting our overall margins. In the brands business, it remains to be the same trend because each of our brands is scaling up and a lot of operating leverage is coming in the business. So structurally, you know, we are expecting 100 basis points every year for the next few years.
Well, I don't know how to read your stock movement at all, Colleen, compared to the numbers you're saying. 30% profit growth, and even after exceptionals, it is a 17% growth. EBITDA is up 27. The stock is down 3.9, 4%. You're quite sure that this the duty-free removal status has no impact on textiles, on your textile exports?
Lata, I believe this has not had any direct implication on us.
Okay. All right. We will leave it at that, Colleen. I think the market is misinterpreting and now it's recovering a bit. So Arvind very categorically states the duty-free status given to some Indian goods did not apply to textiles from that company. And therefore, I think the market has misread. Now it's still in the red, but it's not 4%, but it is 3.5%. So perhaps it was that misunderstanding that kept the stock or is keeping the stock a little under the weather. Thanks a lot, Colleen. We have to take a quick break. Up next, we are going to focus on that strong auto sales number we got from Bajaj Auto. Rakesh Sharma, Chief Commercial Officer, will join.